Well, what we see today is that following the successful rollout of certain schemes like UK Faster Payments or SPI in Mexico, more and more countries are in the midst of rolling out instant payments today. I think you could say that probably 35 countries today have already implemented it or have committed to a hard launch date for instant payments. And if you believe the analysts, then they even say that this can go up to 140 countries. So it's really moving, there's a lot of activity going on. Now, there's a number of main drivers that we see which are leading to the instant payments initiative. First one is what I would call the changed customer behavior or customer expectations. With all these new entrants coming in, which are creating additional services to instant payments, people tend to look at payments as another way of doing things. At the same time, these new entrants which came in are disturbing the payments world. For a long time, the traditional players have been ruling the payment sector. Today, with the fintechs, the startups, the partnerships, really focusing on bringing additional experience, that's completely changing the landscape. Consumers today are really expecting almost everything to happen at real time. Yeah? Paying an invoice, paying friends should only be a few clicks or a few swipes away from real execution. At the same time, they're expecting to get availability of their funds as soon as they arrive. The corporates, from their side, are trying to use instant payments not only to have a better cash flow management, but also to reduce fraud activity and at the same time get more value in serving their customers. Regulators are looking at instant payments. Many countries now, regulators are putting in place new rules, new regulations to actually facilitate instant payments, not only because it gives them more tracing activity, but also because it's increasing the fluidity in the economy. And finally, globalization. Whether it's you or me or a corporate, we all want to have the same single experience when we do a payment or a transfer, regardless where we are in the world. Now there's a number of challenges that we face, or that the banks face, but let me name three of them. The first one I would say is probably banks, first of all, obviously have to decide whether they're going to go ahead and offer instant payments. But once they do that, the more important thing is they have to define what additional services around instant payments they will be offering. Because as I said, it's a real threat for them of losing customers to the new players because they are not yet there to offer the same similar service. So that's a real threat. At the same time, a bank can really reduce its end-to-end transactional cost by enabling new payment methods, creating additional value for its customers. Secondly, I think the legacy adoption to 24/7 by 365 is a real challenge for banks. We all know that these legacy infrastructures that they have today need to be revised, needs to be changed to be able to cope with the real-time 365 days a year processing capability that is required for instant payments. And this 24/7 requirement is also creating a need to change end-of-day processes and batches which will have to be redesigned. And finally, I think a challenge which is more for the international banks and the global banks will be the need to be able to connect to more than one instant payment scheme, CSM, at the same time, quite often from one unique underlying banking system. Remember what I just said, one of the main challenges for these banks is to change their traditional infrastructure to be able to cope with processing real-time entire value chain payments, including funds checking, fraud monitoring, transfers, accounting, and you name it. Compared with that, you also have to include their capability to support CSMs, single existing ones, but new ones as well. And this is where we come into play. We now have a solution which is called Network Gateway for instant payments, which is a fast, reliable, and very cost-efficient solution that enables our customers to start smoothly with offering instant payment capabilities. What we try to do with our solution is focusing on reducing the impact on the existing back-office applications. We can orchestrate the entire payment processing flow. We accept any payment from originating channels, and we take care of connecting to all of the CSMs. In that way, we minimize the impact on the existing back-office applications. By doing that as well, we also avoid an impact on these systems coming from changes in these connections, in these protocols, because we take care of the future changes and adoptions. We can take care of that. Now it comes with some main capabilities, some of them like the capability of accepting any-to-any payment coming from end consumer channels. We can take care of the entire data call chain to make sure that we can accept and validate payments. From a connecting point of view with the CSMs, with the schemes, we make sure that the message comes in the right format, we do the data formatting, we check the reachability of the counterparty, and we do the time management. It also comes with a nice feature which we've called SCT, Separate Credit Transformation, which allows us to take an individual instant payment, and if the final receiving bank or the final receiving customer is not instant payment enabled, we will transform that into a standard SCT transaction. And finally, when it's going to be released, it will be supporting two of the main existing or will be existing instant payment schemes in Europe, being the EBA and the domestic Italian instant payment scheme, which will be launched by ICBPI.